Welcome to Nick's Finance, the channel you should watch for anything financial. We're about to go on an exciting adventure into the world of investment and finance. Therefore, you've come to the perfect place if you've ever pondered how to negotiate the complex maze that is the stock market properly. It gives me great pleasure to provide you with some priceless knowledge about navigating the stock market and tips for successful investing. Keep reading, whether you're an experienced investor or you're just getting started, because the information you learn today can be the key to realizing your financial goals. Understanding market fundamentals. The key to effective investing is having a solid understanding of market fundamentals. You need to understand the fundamental ideas that underpin the stock market in order to trade it successfully. This entails knowing the fundamentals of mutual funds, equities, and bonds in addition to the complex inner workings of the market. It's crucial to be familiar with different stock kinds, such as ordinary and preferred shares, and to comprehend how market swings work. Furthermore, a firm understanding of these principles is necessary for diversification, which is an essential risk-spreading approach. Making wise investment selections requires the ability to analyze news sources, understand financial documents, and apply data analysis tools. To put it simply, the cornerstone of successful investment is a thorough understanding of market fundamentals. Setting clear investment goals. Establishing well-defined investment objectives is the first step towards achieving financial prosperity. These objectives act as your roadmap, directing your investing choices and helping you stay goal-focused. Setting SMART, specific, measurable, attainable, relevant, and time-bound goals is crucial. Whether your goal is to fund a dream vacation, save for retirement, or make a down payment on a home, being specific will guarantee that you know exactly what you want to accomplish. Measurability enables you to monitor your development and make necessary corrections. Relevance connects your objectives with your life goals, while achievability guarantees that they are reasonable given your existing financial circumstances. Lastly, giving yourself a deadline creates a sense of urgency that will push you to consistently take action towards achieving your investment objectives. In the building world of finance, clarity and focus are your allies, helping you stay on the right path to financial success. Risk management and diversification. Two key elements of successful investment are risk management and diversity. Risks are a fundamental aspect of investing, and the stock market is notoriously turbulent. To effectively manage risks, you must be aware of your risk tolerance and develop a plan that fits it. By distributing your investments over a range of assets, industries, and geographical areas, diversification is essential to this process. By doing this, you lessen the effect that a single unfavorable occurrence can have on your entire portfolio. This strategy increases the possibility of long-term growth while reducing risk. When you diversify your investments and practice good risk management, you may protect yourself from unanticipated market swings and trade the stock market with more stability and confidence. Conducting thorough research. The foundation of successfully navigating the stock market is conducting in-depth research. In the ever-changing world of finance, decision-making requires knowledge. Investors should carefully consider possible investments in order to achieve this. This comprises a thorough analysis of the cash flow, income, and balance sheets of a business to determine its overall financial health. It's also critical to keep up with current events and market trends. Technical analysis, in addition to fundamental analysis, can offer insightful information about changes in stock prices. Evaluating a company's management team, industry prospects, and competitive stance can also be advantageous to investors. Sound decision-making requires gathering information from a variety of sources, including news stories, annual reports, and trustworthy data analysis tools. In the end, careful research enables investors to reduce risk and optimize their chances of achieving financial success in the stock market. Timing the market versus time in the market. For all investors, the age-old question of timing the market versus time in the market is crucial. Buying or selling assets strategically based on forecasts and short-term market changes is known as timing the market. It's a strategy meant to make rapid money by taking advantage of market volatility. However, Time in the market emphasizes a long-term strategy in which investors stick to their assets through market ups and downs in order to profit from the market's overall growth over time. Although it can seem alluring, timing the market is infamously hard to do well. Time in the market, on the other hand, is a more patient and historically tested approach that offers the possibility of consistent long-term profits and less stress related to trying to predict short-term market movements. Ultimately, the choice between the two depends on individual risk tolerance, financial goals, and investment strategies. Long-term versus short-term investing. There are differences between long-term and short-term investing strategies in terms of risk tolerance and financial objectives. Holding onto assets for a long time, often years or decades, with the main objective of accumulating wealth and capital appreciation, is known as long-term investing. Investors can profit from compound returns and weather market swings with this methodical technique. On the other hand, short-term investment seeks to make money more quickly and frequently, perhaps in a matter of days or weeks. Due to transaction costs and market volatility, it poses higher risks, even if it might produce instant rewards. Emotional control and discipline. Discipline and emotional self-control are essential qualities for any successful investor. Emotions often run high in the finance industry due to the continuous swings in the market. It's critical to maintain composure and reason when faced with both successes and setbacks. Being disciplined involves sticking to a well-thought-out investing plan rather than giving in to snap judgments motivated by greed or fear. You can avoid impulsive buying or selling, which frequently results in financial difficulties, by keeping emotional control. Regardless of market noise, it's critical to establish clear goals, create a systematic investing plan, and adhere to it. By doing this, you can improve your odds of reaching your long-term financial objectives and lessen the emotional roller coaster that frequently accompanies stock market trading. Building a diverse portfolio. A good investing plan is based on the core idea of assembling a diversified portfolio. A diversified portfolio lessens the possible impact of underperforming investments by spreading risk across a number of asset groups. A combination of stocks, bonds, real estate, and other investment vehicles allows investors to strike a balance between the security of more stable assets and the possibility of earning large profits. In addition to mitigating the effects of market volatility, diversification makes sure that a decline in one area of the economy does not destroy the portfolio as a whole. Because different assets may perform well under different economic circumstances, it enables investors to profit from fluctuating market conditions, staying informed and adapting. Successful investment in the stock market requires being aware of changes in the market and being able to adjust. The state of the economy changes, markets shift, and new possibilities present themselves all the time. In order to prosper in this ever-changing landscape, investors must consistently strive to stay informed. This entails utilizing data analysis tools, researching pertinent news sources, and keeping a close watch on market movements. The capacity to modify one's investment plan in response to evolving conditions is equally crucial. This flexibility entails being prepared to modify your investment horizon, reallocate assets, or alter your entire portfolio in response to changing market conditions. We are grateful that you could come along on this insightful journey into the complex world of stock market navigation. We really hope that our advice on how to invest successfully on Nix Finance proved to be a helpful tool. If you have any other helpful investing tips, please let us know about them in the comments. Also, in the event that the knowledge you've received could lead to financial success, please think about supporting us by clicking the like button, becoming a subscriber to our channel, and forwarding this video to your friends. By doing this, you ensure that more individuals have access to this crucial information in addition to helping us grow. Watch this space for additional financial insight, and never forget, your success is our success.